Well, hello everybody, and welcome to Thursday, October 24th, Mentorship Webinar. Want to start out today just mentioning again that next Tuesday, we are going to discuss the book, the movie, whatever you choose to do, called The Secret. And in summary, we talk a lot about the psychology of trading and you are what you think. The secret basically is the law of attraction. And the law of attraction means if you think about it, you will attract it. Okay? If you think negative thoughts, you will attract negative events and negative people. If you think positive thoughts, you will attract positive events and positive people. The book and the movie talk about, the secret can be used to bring health and wealth and relationships. It can be used for anything. It is a marvelous, marvelous teaching. And I want to spend a good bit of time next Tuesday talking about it. If you haven't gotten a copy, just go into Amazon. It's dirt cheap. You can get a brand new hardcover for $4. I have bought these for all my kids, and this is, if you live your life with this in mind, you will have abundance, and that's what life is all about. So we will be talking about that on Tuesday. Please get a copy of this. If you've got Netflix, just go on Netflix and stream it. It's an hour-and-a-half movie. It's awesome. I have watched The Secret probably 6 times now, and I get something new every time I watch it. And it's one of those things that, just like every day I meditate, and it helps me to get me in the right frame of mind. This book is one of those things that every once in a while I think it's good for you to go back and touch base on the principles behind it. Just out of curiosity, has anybody in the group, and you can just raise your hand, that'd be great. I'm not going to call on you, but if you could just raise your hand. Has anybody got the book? Has anybody watched the movie? Is anybody familiar with it? Has anybody heard anybody else talking about it? Just go ahead and raise your hand and let me get a feel for whether or not people have done that. Okay, wait, excellent. 1, 2, 3, excellent. All right, good. Glad to hear it. Super duper. I would suggest that everybody who hasn't, please get a copy of it. Now I'm going to go over next Tuesday. I'm going to go over the Cliff Notes like I usually do, but I want to have a discussion around it. So I'd really like to have the people, you people out there, discuss it. I don't want to lecture about this. I want to discuss it, and that's going to be Tuesday. Alrighty, cool. All right, excellent. Let's see. The next thing on my agenda is we're going to get right into. I've had another number of questions. One of the questions was, can we get into a bear call on Priceline, and I will answer that as we get into there. I've also had some other questions on some stocks to look at, and we'll talk about those when we get to those. So let me just start out and get right into the trading business plan. And for those of you that are new, remember, if you have a question, I record this, so I like to keep everybody muted, so we got a nice clean recording. This recording then goes onto the website. All you have to do is log into the members page, and actually, let's go over there. You go into the members page, and you know, if the recordings are right here. All you have to do is click on here, and you can see the recordings. The other thing I've got right here is trading PDFs. Anytime I talk about something, I load it onto the website. You'll see that we're talking about the trading business plan right now. You can go onto the website and you know, double click on that trading business plan. When it loads it up, you've got in front of you everything that I've been talking about. Okay, see, you've got an option either to print that, do whatever you want. I'm sorry about these pages with some color on there. I probably should have made that all black and white, but there's only a couple pages that are like that. So you know, you can do that. Also, let me remind everybody that if you have an expiring credit card on file, what I'd like you to do is go right down here to in the lower right hand corner, profile options. Profile options. Just click on profile options, and you can go in and change your credit card. And when you change your credit card billing info, okay, you won't be dropped out of the system. Okay, if you have an expiring card and you're due for a payment and the card expires, you'll be dropped out of the system and locked out of the system. Okay, the only way with this new, I mean, we're trying to automate things because I've got a lot of people I'm working with. I'm trying to get a lot of information out there, and I just can't do a lot of the stuff that I used to do. Just trying to automate this. So your account is really your responsibility. Same thing if you ever want to cancel. I mean, you can cancel at any time. It'll go through the current month, and it'll tell you what that is, you know, what your expiration date is. You can take and if you ever want to come back in. Now, if you cancel and want to come back in, it's going to be $247 a month, and that's because you guys all got grandfathered into the new one. I've got a couple people that are in the webinar today that were not part of my previous mentorship program, and they are paying the full price. Okay, but let me just make a sales pitch here. The full price for what I have to offer, let me pat myself on the back a little bit, it is a bargain. I mean, I know my competition out there charges $5,000, $10,000 to be coached by somebody who is not the person. I am the person. I am the one that's coaching you. You're paying a tenth of that. You're paying it a month, and you can stop whenever you want. You can, you know, it's totally up to you. All right, so this is enough of the sales pitch. Okay, here we go. We're on the last portion of the trading business plan, and here we go. Part of the trading business plan is your portfolio allocation. Now, we spend a lot of time focusing on options and theta trades and the weekly options, but as your portfolio increases in size, and it will, you have to remember that this is not, you're not going to have a constant increase month after month after month after month. You're going to have some flat periods. You're going to have a little bit of down periods. But on the average, you want to see your learning curve going up. And, you know, at some point in time, you're going to be building your portfolio. When your portfolio gets to be, roughly, let's say, you could probably start doing it when it's 50, and when it gets to be 70,000, $100,000. Definitely, what you want to do is you don't want to put that all into options. My portfolio, my personal portfolio, my hedge fund, 70% is in stock. 70% is in stock. Stock is less risky. I, don't pay much attention to it. I follow the regression channel. When it's oversold, I buy. When it's overbought, I sell. That's about it. That's about it. I don't spend a lot of time on it, and I buy low and sell high, and 70% is in stock. You don't have the time consideration. You don't have and the stock market goes up and down. So if you bought low and it's heading up and it has a pullback and you don't worry about it. You don't even worry about it. You just buy low and sell high. You got dividends coming in. You don't have time constraints, and it's less risky, and it's way low anxiety. And I love low anxiety. I love it. My life is not very stressful, very stressful at all. Now, 10% ought to be in options, and I include weekly options in there. And so you can always say, okay, let's say roughly I've got $300,000, so I've got $60,000 in options. Well, okay, so how much of that should I be investing? Well, let's go back here and just say, okay, trade size. I get $60,000 in options. My trade size for options ought to be maybe 2,500. Okay, you can always use this trade size based on your portfolio size. You can always come back there. Theta, I always like 10% of my portfolio of theta. It's a monthly income generator. Now, I trade theta a little bit differently than what we talk about. I like to give you education around theta, and we talk about bull puts and everything. The majority of my trades are right around 40 days. I will buy an iron condor on the RUT, and I will watch the risk profile. And the day after I'm down 6%, I'm out. And the day after I'm up 10%, I'm out. Pretty simple. Pretty simple. And I do that month after month after month after month. Now, we talk about bull put spreads. We talk about bear calls. We talk about timing. We look at the Arun indicator. All that is for you to really get in tune with the theta trade. Your trading system has to be derived by what you believe to be correct. Like I said, I'm a low anxiety person. I like to do it the same month after month after month. And I know, and I've showed you that one of my mentees went through a 10-year analysis on the RUT, and that's what he did. He asked me to set up the rules, and I said, I'll tell you what, 40 days, go ahead and buy an iron condor. Exit the day after you've made 10%. Or exit the day after you've lost 6%. And run that through. And what he did for 10 years, he backtested this thing, and it averaged 3.5% to 4% a month. Man, I am fine with that. I am fine with that. There's nowhere you can get that. And it's a low anxiety trade. You just get in there and you do it, and you're not all, worried about it. Yeah, sometimes, we might be down 6%, and I get out the next day and whoops, I'm down 12%. That happens. Sometimes we're up 10%, and by the time I get a chance to get out, I'm up 17%. It all works out. It all works out. Now, on the week, so theta in this case would be, if you have a $300,000 portfolio, would be $30,000. If you're going to make 4% a month, that's going to be $1,200 coming in. It's almost like, dare I say, Social Security? because who knows about that? So I better not make that analogy. But it's just an income generator, and like I said, this is not, you can't bank on it, because in the long run you're going to have an average, but remember, that's just going to be an average. So start thinking about, as your portfolio increases, start thinking about stock. Keep it simple. Buy when it's over sold, sell when it's over bought. Okay? All right. And the last one, of course, is our learning curve. And the learning curve, all this ties in. And remember way back when we talked about your goals. And the goals have got to be, this person's goals were, he started with $30,000 portfolio, and he had this goal, and but his ultimate goal was he wanted to get to this point here, and he knew he had to at least triple his portfolio size to get there, and and then you establish a learning curve. Now, for a lot of people, this learning curve might go like this. Okay, what do you do if it goes like this? Well, if you're in at $30,000, you've established your trade size, and that's a 6-month period of being down. Okay. So, what can you do about that? Well, one is you want to cut down the amount you're investing. Okay? And that's counter what people do. When they're down, they start investing more to get back up. And then what happens? Okay? And then what happens? Anxiety starts setting in, and their trade size gets really high, and then they start gambling, and before you know it, they're out of the game. All right? This is okay. What this is telling you is you're not ready yet. You're not ready yet for the level that you're investing. Maybe you need to back up a little bit. Maybe you need to revisit your trading journal and your notes and look at some of the things you've done in the past, and just revisit all your strategies. Okay? And then when you start doing this, then now you can say, okay, now I think I'm ready. Now maybe you're back. And now maybe you start doing this, and it starts going up. And then at some point in time you can say, hey, my portfolio's doubled. I think I'm getting this. But don't fool yourself. Don't fool yourself. As soon as you say to yourself, self, I got this. Guess what? The market's going to come up and snag you and say, no, you don't. So be cautious. Always be cautious. Don't become egotistical. Don't allow your ego to get into this. Stay humble. Keep learning. Stay conservative. Okay? And keep on moving on up. And take the time to go up your learning curve to reach your ultimate goal. All right? Okay, excellent. So that's the trading business plan. So what I'd like to do here is just quickly go back here, and we're gonna go all the way back to the beginning and do a quick review of everything. Now, first of all, the quick review is these are the 8 components that I think ought to be in your trading business plan. You think it ought to be different? You go right ahead. I had one mentee about 5 years ago who emailed me a 40-page document, and I read it, and I said, "Wow, this is fantastic." He had strategies. He had a list of education, what he wanted to do. He wanted to take these seminars. He wanted to go to the Traders Expo on a regular basis. This was awesome. It was awesome. About 6 months after he'd done that, I was talking to him, and I said, "How's that trading business plan coming along?" And he says, "Oh, I put that aside." Oh, really? How come? Well, it was just, I didn't feel like I needed to update it. And how you doing? Not too good. Oh, okay. Maybe this should be an evergreen document that you pull out and you look at every once in a while. Absolutely. Okay. You want to establish your goals. You want to then have your affirmations that you write down on paper and you say them every day. And you'll hear about this in The Secret. They don't call them affirmations per se, but you hear a lot of people talking about, you are what you think. Well, this is letting your visions go, and then this is writing it on paper to program your brain with positive information about who you want to be and how you're going to get there. And then you say it over and over and over again, and you believe it. You say it with conviction, and you visualize like you already have it. Okay? Now you're invoking a higher power into your life to help you with your trading. It's not hocus pocus, people. I'm here to tell you, this stuff works. This stuff works. Okay. We got the trading strategy based on what you have. Make sure you have your rules down. Make sure you don't overtrade. Make sure you have a trading journal so you can statistically go back and say, how am I doing? What are my expectations? And look at your portfolio and remember your learning curve. And remember that this is an evergreen document that you want to continue to work on. Remember, this whole document is on the website. You can go into the PDF file. You can print it out. You can use this as a template to begin putting together your own trading business plan. Got a good group of people here today. This is the last I'm going to talk about trading business plan for, you have a question on this at any time. I would love to talk to you about it. Either email me or bring it up in class. Any questions at this point in time on the trading business plan? Any questions at all? All right, no questions. Now, do me a favor. Just like you all put up your hands for looking at The Secret, if you have started to look at this and have started to put together your trading business plan, could you just quickly raise your hand for me, and then just so it gives me an idea of how? Okay, excellent, excellent, excellent. All right, super. Let me just say to those of you that don't have your hand up, this, like any endeavor that you go after in life, requires your effort. I can sit here and talk to you about this and teach you what I know, but until you do it yourself, you will not be in the game. You've got to do it yourself. Okay? So I behoove everybody to jump in and do it yourself. I'm here to help you. Any questions you've got, please. This is what, I am your mentor. I'm here to help you. Any questions? All right, you can put your hands down. I appreciate that. Thank you, everybody. I'm glad to see a lot of you are actually doing this. This is fantastic. All righty, let's start by looking at the general market. The general market is relatively strong again today, and it looks like we're going to have a little pullback here. But one thing I find very interesting is things do tend to follow these 5-day, 15-day moving average lines. And when it stays above the 5-day moving average line and the 15-day, usually you've got a pretty well-defined trend. All right, and it sure does make sense, because the market was at the -1 on the regression channel. The market was a little bit oversold here. All right, so it makes sense that it's making this kind of a move. Now, you'll notice that what's been going on here: goes down, it goes up, it goes down, it goes up, it goes down, it goes up. This is the way the market behaves most of the time. Okay, that's why theta trades are so good. So let's talk about that. We're in the RUT. We're in the RUT, and we're in with a bull put spread. Now, remember I was talking to you about, religiously I go in at 40 days and put on an iron condor. I did not this month. Because I was concerned with what was going on with our government. I was just concerned. And I chose not to do anything this month. And that's okay. That's okay. What am I going to do next month? Around 40 days, I'm going to put on an iron condor, and we're going to talk about that. But currently, I'm saying that right now, this would have been a good time to put on a bull put spread, because it was trending up for sure. And the Arun indicator was pegged up here. This green line is the bullish line of the Arun indicator. So this was a good time to put on a bull put spread. All right, that bull put spread that we put on was a we sold the 1020 and bought the 1010. Sold the 1020, bought the 1010. Okay, that's a bull put spread. It's a bullish strategy. As long as it doesn't come down to here, we make money. Now, this was only a short period of time, and I always like to look at the Analyze tab under the Risk Profile to look at how I'm doing. And this is where I put on the 6%. There's my uncle point. As long as I don't touch here, I don't do anything. I just let it work. And currently we're up 3%. 3% for the month. Now this was a bull put spread. Okay? And how many days do we have left on this? We have 21 days. We have 3 weeks. Okay, we're up 3% on kind of a half trade, if you will. There's nowhere you can get that. These theta trades are outstanding. And we've talked about people before that trade hedge funds that this is all they do. This is good stuff. You have to decide how you want to do your portfolio. Okay, the same thing was true with the Priceline. Priceline, we went in and we put on a bull put spread back here. And why do we do that? Well, it had just crossed over. 5-day had crossed over. We were starting to move up here. The stochastics looked good. We were just, the trend was heading up. And we put on a bull put spread here. All right. Ahead of some big moves on Priceline. Then it had a couple drops. And today it's up again. Now, had a question. And the question was, well, okay, can I put on a bear call right now? Can I put on a bear call? And that was after these 2 days. And the bear call that they were looking at was 12:30. 12:30 and buying the 12:40. Okay. So, let me look at that a little more. That doesn't look like a bad idea. Doesn't look like a bad idea. The only problem, I've got 2 concerns with going ahead and putting a bear call in and closing up the Iron Condor. Yeah, I think it'll give you another 50 cents credit. Is that we have this looming. We have earnings looming. Now, it's not until the first week of November, but that's 2 weeks away, and that's something to watch out for. The other thing is we've got the Rune indicator is pegged, and we're following that 5-day moving average line, even though we had 2 days of drop. Can you do this? Yes. Yes, you can do it. Would I do it? No. No. For the 2 reasons I gave you. 1, we've got earnings looming. And 2, we have a pretty strong trend going in the upward direction. So no, I would not do this right now. That doesn't mean that that wouldn't be a good strategy. So the person that brought that up, that's good thinking. I love that thinking. I love that thinking. And if you choose to do that, you're putting together your best thinking on the strategy, and I think that's great. I think that's great. David, I see you have your hand up. Let me unmute you here for a second. David, do you have a question?
Yeah, I had a couple. 1 comment and 1 question.
All right. Cool.
On Priceline, I got in back with 50 days to go. I had a bull put.
Okay.
And got in with 94 cents credit, I think it was.
Do you remember what day that was, David?
It was well, it was 52 minus whatever. Let's see, what is it now?
It's about 21, I think.
Yeah, so it's about a month ago.
Okay.
It was when it was rising.
Okay.
And
right
then
around.
it had a really bad fall.
Yep.
Almost got out.
Okay.
And then stayed in it and got the final 3 contracts finally out of it. I had 10. Monday, 7 of them hit. I just put in at 18 cents to buy it back at 18 cents, and I've now cleared all 10 of them out.
Nice, nice. So you have made your money, and it's in your bank account.
Yeah, and it's safe. So, and I know the earnings are coming up. Another question on the CRM that I got in on a put, and it's been going, unfortunately, been going up. It had been a better call.
Yes. Yes. Yeah, we'll take a look at CRM. I haven't been talking about CRM lately because, you know, that's exactly right. That has gone up. Now, we had a nice couple days dropping, but I basically got out of that. I never was personally in it, but I just put one in there to balance the portfolio. You'll notice that it's out of the portfolio here.
Okay.
So, yeah.
And
sorry I didn't mention that, David. I probably should have.
Yeah, it was down. I was going to get out, and then it went down, and then now it's back up. So I think it's getting close to the 30% level loss. So it'd probably be a good time to get out.
Yeah. The other thing to look at is, you know, the other thing I kind of keep an eye on here is closing 2 days below the 5-day moving average. And it doesn't look like it's going to do that today. So, you know, if it did, I would say, hey, why not just hold on to it for a little bit longer? But
Okay.
if it doesn't, you're right, David, this might be a good time to say, okay, I'm out. The other thing is, look at this.
Yeah.
That's pretty overbought. So, you know, that's another reason you might want to just hang in a little bit longer. Remember that 30% rule is just a guideline.
Okay.
Yeah. Okay?
Hey, thanks, Dale.
You're welcome, David. Good. Excellent. Excellent. Okay, super. Lou, I see you have your hand up. Let me unmute you here for a second. Lou, how you doing today? Oh, Lou, can you hear me? Oh, bummer. Bummer. Lou, do me a favor and email me your question because we're having trouble getting through today, and that's I'm sorry about that, but sometimes that happens. Email me your question, Lou, and I will answer it and bring it up next time. John, I see your hand is up. John, how you doing today?
I'm good, Dale. How
Excellent.
are you?
Excellent.
I have a bull put spread on Priceline.
Okay.
950, 945. As you know, I used the 5-point spread.
Yes, yes, you're up around here. Okay, good,
Yeah.
good.
So I think I'm not in serious jeopardy there because I think it's, at this point, it's over 120 points above.
Yes.
Above where I am. So
Now, John,
what would your suggestion be as to when to get out of that? If it starts to move down.
Okay.
I think other students probably would like to know the answer to that.
Okay. Two things, John. Two things. One is I love this risk profile. This tells me everything I need to know. It shows me, you know, how I'm doing and where I really have to worry about. And you can see that, and these theta trades will go back and forth here. Remember that on the x-axis down here you have the price, and this little hash mark is the current price at 1080. What I have down here is the 6% line, and that's all the way down to 1,000. So Priceline could drop 80 points, and I would still be in. I would still be in. So I use the risk profile to make my determinations. And with a theta trade, I will stay in. And as long as because the longer you're in there, the more money you're gonna make. Okay. Now, at some point in time, you're gonna get a nice return, and you're gonna say, hey, you know, I've made about 80% of what I can possibly make here. Well, at this point in time on Priceline, you've made about 65% of what that is. So you're close to getting out on the profit side. Okay, John. The other thing is this 5-day and 15-day moving average line kind kind of tells you, yeah, I ought to be looking pretty closely. But as David Crowner was telling us, that he had a bull put spread on there, and he went through these 3 down days. It didn't come close to his uncle point, and he's still in there and did quite well. So this is how I gauge whether to be in or out, John. And I let it go. I let it go. That's how I do it. All right. Good question. Good question. All right. Super. Let's take a look at some of our weeklies. And the first one is the EEM, and I'm wondering, David, I'm going to unmute you here for a second, because I know you took this and you got out when it did this, and you were still in there with a put. Wow. I'm surprised you haven't mentioned that. I'm going to unmute you. David, are you making a boatload?
I got out. I actually got out this morning on the put.
Okay.
I was profitable on the put, so
yeah.
I was up. So.
Excellent. That's fantastic. That's fantastic.
It was chopping around, so I thought, well,
yeah.
it came down to almost 161. And I thought, well, I'll just take. That's doing pretty well there. I'll just get out.
Now I see that when it gapped through there, it went through the 261. So if you chose, now when you did the 161, David, tell me how you did that.
I think it was like the yesterday's close to up to the top, and that like yesterday's close up into the pre-market, like in there.
Okay. Okay. Well, where was your start point? Do you recall? Was it maybe somewhere around here?
About at the bottom there at Wednesday, where it bottomed out down at 42.6.
Down here.
Yeah.
So you did a Fibonacci retracement.
Right.
Okay. Okay. Yeah. Okay. Okay. There's a number of ways you do the fibs. I like to do the Fibonacci extensions, and at that point it would have showed me that you're way over sold on this one. So taking your profit at any point down there would have been good. But this is one it's actually in a squeeze right now, which really I don't see that as a squeeze, and I don't see this action as a squeeze. That's why I rely pretty much solely on the Bollinger Bands. This is a squeeze in my mind. This is not a squeeze. Why we got a red dot there is beyond me. But so anyhow, that's EEM. So we're out of EEM. FAS is moving into a little bit of a squeeze. It's interesting to me that the market is up strong today and the FAS is just kind of not doing anything. I got out of the put side of the FAS, and now I have a call with 1 day left. I'm going to watch this closely. I'm not going to give away all the money on the call side. And GDX continues to increase. GDX continues to increase. So, and it's interesting because if you look a little bit longer here at the hourly, I put on a Fibonacci there, and it's right at the 261 of on the hourly Fibonacci. It's always good maybe to take a longer view of this. Let's just take a look at the GDX, and you say, well, it's up to the 261 here. But, everything looks pretty strong. So now you start kicking in, well, it's above the 5-day moving average line. Maybe, this intermediate trend is up. Maybe it's going to push through the 261. Maybe it's going to push through here. And so when you're looking at these weeklies, that's why I love the weeklies. Brings all the trading into play, all the strategies into play. TLT, we have no squeezes on TLT. It's been pretty much this snake is pretty calm. It hasn't needed any food lately, so we don't have anything on TLT. Okay, got a lot of stuff to go over here on the regular trade, so let me get into that. Had somebody send me a lot of different stocks to look at, and I'm going to kind of go through a couple of these. The first one was Cinemark, and this person was looking at a lot of the movie stocks. Cinemark, you can see, has been very strong. But this is one of those that this is a beautiful example of one that was oversold. And let's just think about buying stock, okay? When it starts doing this, at this point in time, when it starts rising back up, perfect time to buy. Perfect time to buy, and then you can almost fall asleep. You say, hey, I bought this at $27.95. Oh, okay, it's having a big pullback. No problem. I'm still making money. And now you're up to 33. Okay, buy low, sell high. This regression channel is a beautiful thing to do as far as just buying and selling stock. I would say the train has left the station. It's not overbought at this point. So this is this is strong, but I don't want to get into it. And then you got the earnings looming. All right, but this is definitely strong. Definitely strong. HDV is okay. The iShares. This is a cool one because this was definitely oversold here, and it gave all indications to get in. But that was back here. That was back here. Ready, set, go. There you go. There you go. That's when you should have gotten into HDV. At this point in time, I wouldn't get in there. I'd wait for a little bit of a pullback. You can see it's hitting this previous high right here, which is a triple high. Okay. And it'd be interesting to see if that busts through or maybe it pulls back. Let's see if we can put on some Fibonacci's here. Okay, there's another reason why. It's at the 161. It's got a lot of resistance here. It's at the 161. So now, is this a good time to do a put? No, no, because that would be we never buy a put unless it's overbought. Okay, this is a time to watch. See if it pulls back a little bit. If it comes back up there and makes a higher high, boom. Now you can go ahead and get in there. Okay. Next one is MPLX. This is a cool one. It's got earnings coming right up here. Actually, did it have it? No, on the 31st of this month. But this was one that you could have possibly got in back here, which would have been back here, and just rode this right on up here. See how that hugs the 5-day and the 15-day moving average line? Comes down here and busts through for 1 day, not for 2 days. No closes below it here. No closes below. You know, this is now. Has this left the station? 2 reasons I wouldn't get into this one is one, you've got earnings looming, but this one would have been a good one to get into for sure. Now, the next one is one that I kind of like. I kind of like that. Kind of like PM, Philip Morris. Philip Morris. It's had its earnings. Its earnings were just about what it estimated. It was oversold. It had a run, pullback. Now it's having another run. It had a ready, set, go. Okay, stochastics is going up. I like Philip Morris. I like Philip Morris because if it goes through here, there's a good chance it's gonna run again to the top side. I like Philip Morris. The other one that was brought to my attention was United Airlines. United Airlines. It's got earnings today, I think. Let's see. Oh, there you go. Earnings came in not too nice. Not too nice. So you say, well, has it already taken that into account? I like this formation. Earnings is beyond us. I would maybe wait for it to cross over the 5-day moving average line again, and then you could jump in on UAL. That's a good one. That's a good one. And the last one was Hershey. Hershey is, I like to see something that's overbought and oversold, and I don't see that on Hershey, so I don't really want to look further. Okay? There are so many that are overbought and oversold. There's no reason to jump in the middle of a move. All right? I do like PM, and I like UAL. All right, let's take a look at what we have. We've got a call on BP. We've made, I think, close to 40% on BP, and we have earnings coming up next Tuesday, is it? Next Tuesday? Now, at this point in time, I'd watch this. I'd watch this, and if it stays above the 5-day moving average line, stay with it for a while. But if you want to get out with 40% gain on BP, that would be a good decision as far as I'm concerned. I'm going to stay in there. Coca-Cola. I've got a call on Coca-Cola, and this was so oversold, I'm willing to give this a little bit of latitude. It has already had earnings, and it was like ho-hum. But the earnings, it didn't affect what's going on here, and Coca-Cola keeps running up. So I like Coca-Cola and a call on Coca-Cola. BAX. I don't see Jim Fay in the group today. Jim's been having trouble getting hooked up. BAX is one of those that I had trouble. I thought it was going to have. I thought a put was good here. I thought a put was good here. I thought a put was good here. And when I didn't have a put, down it went. And now I think a call is good, and it's taken my money away. BAX and me, and this is cosmic justice or something like that. BAX and me just don't get along. We don't. Isn't that weird? It's weird. It's weird. But whenever I do something in BAX, it goes the opposite. So, at this point in time, I'm okay with just holding on to the call just because it was so oversold. I think it's going to be going up. Now, I should have, if I didn't, I should have said, it's time to get out of DuPont. Time to get out of DuPont. They had excellent earnings. And, on a put on DuPont, yeah. The same thing's true on silver. You want to get out of silver, I'm okay with that too. All right. GlaxoSmithKline had their earnings, and it was on our watch list, and their earnings came out, and you can see it got clobbered yesterday. I never could see what the earnings were. You can always go to www.glaxosmithkline.com and look under investor relationships. but you can see how it gapped. It gapped down, up, down, up. A lot of activity in Glaxo. It is oversold. I kind of like a put on Glaxo. I kind of like a put on Glaxo. I'm sorry. I am so sorry. A call. A call. Which call? Probably go out to the January 51. Probably go to like a 40, 45. Probably right around here, because this is, I don't like this open interest. Probably right around here. A couple other I wanted to show you was Mickey D's. Mickey D's. I kind of like Mickey D's. Mickey D's came in with relatively good earnings. Let's see if I can bring that up. I think they were a little bit better than the estimation. And, you know, the stochastics are going up. It is oversold. Looks like we're going to start moving up here. Money flow. I like Mickey D's. I like Mickey D's. I like GlaxoSmithKline. eBay is the other one I was watching. Okay, eBay had its earnings and it dropped like a rock on the earnings, but the earnings were really good, and the reason it dropped was, you know, what the CEO said about the future. After it had that big drop, you can see it's starting to move up a little bit more. I like eBay. I like eBay. All right. Now, if we do GlaxoSmithKline, eBay, and McDonald's, now all of a sudden, and we get rid of DuPont and silver, now all of a sudden we have a portfolio that is heavily into calls. So enter the QQQs. The only way to protect that would be, if you see it going down, is to buy QQQ puts. So, you know, and I like the market. I think the market is strong. I think it is strong. So I'd keep my eye on this. I know that I'm heavily into calls, and if you see it drop below here for a couple days, I'd go ahead and start getting some Qs to protect our portfolio. Questions? Questions on anything? Fred, I see you have your hand up. Fred, how you doing?
I'm doing fine. On your Qs, use the usual thing of about either 1/2 or a little bit more Q puts to the calls,
yes.
Number of calls.
Yes. Okay. And again, what you want to do is come over here to the monitor tab and kind of tally up your delta. And you know, if you got DuPont, or excuse me, if you got rid of DuPont and silver and got Glaxo, eBay, and Mickey D's, you're going to be heavily, you know, on the delta to the plus side. Let's say you're up to 2,000, okay, and you see the market maybe going down a little bit. Well, since you're so heavily into the long side, I would almost want to hedge about 50%. So I'd want to get a number of Qs to get me about, you know, about a minus 1,000 delta. Okay. Yes.
Yeah.
That's exactly what I'd do, Fred. Good point. Good point.
Thank you.
Yeah, thank you. No other questions? David, I see you have your hand up. Last question of the day, David.
Yeah, I just wanted to say that in response to Fred, there are now quarterly options on the Qs. So they expire at the end of the quarter, each quarter.
Looks like the Qs are into the weeklies.
Yeah, they also have weeklies and they have weeklies and quarterlies,
Yeah,
which I don't think many others have the quarterlies.
Interesting. Quarterlies. So it's wow, that's a 3-month deal.
Right. And it goes out even farther. And every quarter has those.
Interesting.
You can buy them out into next year.
Interesting. Yeah, okay. Okay. Cool. Nice. That's good, David. Thank you. Thank you. Alrighty. We are, now I love the psychology of trading, so we are into number 13 of 15 meditations. And remember that, again, this is from the book Journey to the Heart. These meditations just fuel your positive spirit, fuel your brain. This one's called Breaking Through Your Blocks. Sometimes we're so blocked in a particular area, like trading success, that we don't even consider a breakthrough a possibility. We're so blocked, we don't even see our blocks. Stay open. Don't limit yourself. Something that yesterday seemed entirely unfeasible and forever beyond your grasp may tomorrow, next month, next year, or even today become something that you do naturally, something that is available to you. See, this is what will happen with your learning curve. You're going to go through bad days and good days and bad days and good days, and now the bad days are going to be less and less and less, and all of a sudden you're going to start doing things naturally and easily. Just like any professional in any sport, doctors, lawyers, accountants, you put in the hours and people look at you and say, wow, you do that so effortlessly. Yep, that's where you want to get to. Your breakthroughs may happen in an area you've been struggling with and working on, like staying with your trading rules, accepting losing trades as part of the business, watching the squeeze develop profitably so easy. Appreciate and respect where you are now. Don't let yourself move to the next level. Oh, I'm sorry. But let yourself move to the next level when it's time. Celebrate your breakthroughs when they come. And this also talks today about our learning curve. Okay? You might be doing this. And you go, oh man, am I ever gonna get to this? And then you go back a little bit, and then you keep after it, and hours of work, and all of a sudden you break through. You break through, and you're off to the races. Once you break through, things get a lot easier. A lot easier. Don't let your ego get in the way. All right? That's my meditation for today. I hope everybody has a great weekend. And remember, on Tuesday, we're going to spend a good portion of the time on The Secret. Pick it up, watch it, read it, do what you need to do. It is well worth your time. The Secret. Have a good weekend, everybody. Bye-bye now.